Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. We need to talk about Warren Buffett and some of the moves that he made from his most recent 13F filing. This was back in May when this was filed. There's another filing that's going to come out in August, and I think it's good to take a look at what he did, what he's looking at, and then see what things we can pull out from it. What notes can we take and what things can we add to our watch list and perhaps keep an eye on, because he is the world's most famous investor and has been one of the most successful investors in all of history. And when you are given information like this from somebody like that, it's good to know. Now, 13F, again, is a quarterly filing. So again, by the time we see it, by the time we break it down, it's not going to give us everything that we would love to know about these particular companies, but it does give us something. It gives us something to research, something to look into. And again, maybe compare notes. Look at your portfolio, look at his, and say, hey, look, here's what I want to take from this. Here's what I want to learn, and here's some things to help me narrow down what might be a good investment for us. So I'll talk about the top 5 things he bought and the top 5 things he sold, and just kind of give you my take and perspective on some of these. So I'll start with the top 5 that he bought. So he bought Ally Financial. Their symbol is ALLY. Ally, and they are pretty much an online bank. Now, I've actually done a video, this was a few months ago, but it was a video about comparing Ally Financial to Goldman Sachs. Now, if I remember correctly, at that point in time, I chose Goldman Sachs because Goldman Sachs had a lot of the investment business. Goldman Sachs also reported their earnings today. I'm just going to compare it real quick to see how Goldman Sachs has compared to Ally Financial, and Goldman Sachs did do better. So when I compare the two, over the last 6 months, Ally Financial is down 34% compared to Goldman Sachs, which is up 20. I'm sorry, both are down. Let me correct myself. And I'll just put this on the screen so I can just y'all can see it. We can all look at it at the same time. So Ally is down 34%. That is the one in blue. And then Goldman Sachs is also down. Goldman Sachs is down 20.92%. So now that we're all on the same page here. Both are down, but Goldman Sachs over the last 6 months has been slightly better, but that's not saying too much in a market like this. But in either case, he did buy a significant chunk of Ally, which is interesting. On paper, financially, they are solid. They are a solid bank. He does have a preference for banks. For a long time, he's held Wells Fargo. He had U.S. Bank for a little bit. He seems to love Bank of America. He is a big banking person, and I think that's just a part of his educational background and a few other things. But in either case, he's a believer in the banks, and Ally Financial was one of the companies that's new to his portfolio, or I'm sorry, that he piled money into in this year so far. Another company is Mckesson. Their ticker symbol is MCK. They're in the healthcare manufacturing type of business, and they are currently up 28% in the last 6 months. Mckesson has been one that has been on my trading list for a while. It's a company I feel like I can make a little quick money. I was clearly not able to find a spot to buy and sell, and it's just been on my list. It again up 28% in the last 6 months is obviously a good company, especially in a time like this. I've been somebody for a while now, having made adjustments from banking over to healthcare, and you're going to notice a trend here. I've talked about AbbVie. I've talked about Bristol Myers Squibb, Eli Lilly, United Healthcare, which is more insurance and health. But y'all get the point. I've pivoted. I've made that change in my own personal portfolio, which we did talk about. But he did buy that. They've done quite well, 28% in the last 6 months. Compared to where the stock market is right now, not all that great. I'm just going to throw the S&P 500 here just to give you a bit of a reference. The stock market, the S&P 500 is down 18%. So negative 18%, 28% for something like Mckesson. I think I'll take Mckesson. So he's been good on that one. So he bought Ally, bought Mckesson. He also bought Citigroup. Again, he has a preference for the banks. Now, Citigroup, which also reported their earnings on Friday, and I believe, if I remember correctly, they did pretty well. They are down 25%. With the market down 18, Citi being down 25, I mean, it's not the worst thing in the world, but yeah, right. yeah, he may know something that we don't. And that's the thing too. He has a much longer time frame. He's more than 90 years old, if I'm not mistaken. And he has a preference for the banks. I've said that before in this video already. But he's someone who likes to buy low and sell high. For some reason, this seems to be an entry point for him, for companies like Ally, for companies like Citi. So just keep an eye on it. Maybe this is the time to buy the banks. I'm personally not convinced yet, but Warren Buffett seems to be. All right, the next one on here, which is probably the one that has made the most noise and people have talked about the most, is Oxy. That is OXY, Oxy Petroleum. That one is up. In the last 6 months, 70%. They're obviously in the petroleum and oil business. And with the conflict in Russia and Ukraine, that has been one of the biggest beneficiaries as to why that company has done so well. Now, in recent weeks, I would say I lose count now, in the last 30 or some odd days, the price of gas has gone down. That has actually started to hurt a company like Oxy. So if I were to zoom in and say, I don't have the gas chart on me now that we talked about in the short clip, in the reel on Instagram and here, but once gas started to fall consistently, this stock has also started to fall consistently. So it was even better, let's say a month ago, than what it is right now. In either case, last 6 months up 70%, which is still quite high. And that one, if I'm not mistaken, was new. It's not something he had been holding on for forever, like a Coca-Cola or an Apple. The last one here that we're going to talk about from his buys is Hewlett Packard. That is HPQ. That one is down 18%, which is right where the stock market is. It's an interesting tech name. We know that Warren Buffett is a big believer in Apple. I think it's the biggest portion of his portfolio. But, you know, to see another tech name is just a little bit odd. And when it comes to name brands, when you think about tech, it's a long way before you think about Hewlett Packard being like one of the premier names or even a name worth buying. Apparently Warren Buffett did. Now, of these five, Ally, Mckesson, Citi, Oxy, and Hewlett Packard, I think the ones that really catch my eye is obviously Mckesson and then Ally, just because I'm familiar with it. I'm an Ally customer myself, and I know it was decent to okay. Now, it being down the worst of all of these, 34%, negative 34%, that's not really exciting me, especially when there are companies that are, like Mckesson, doing a bit better. So I don't know if I would personally jump into the financial space. I mean, y'all just saw me leave the banks. I'm definitely not anchoring to get back into that space, but it is something to note. Now, here are the companies that he sold, and this is what would really raise an eyebrow. He bought those companies and I'm like, cool, whatever. What did you sell? What did you get rid of? What did you not want anymore, and why was that? So here's the thing. I'll start with AbbVie. AbbVie is a company that I did an entire breakdown on. I like the stock. I do not currently own the stock, but for what I read, because the reason why I don't own any other healthcare companies, because I already own Danaher. I'm trying not to duplicate there. But AbbVie, if I hadn't owned Danaher already, and I hadn't had it for almost 3 years, then AbbVie definitely would have been one of the next ones up. They're up 10% this year. Again, the market is down 18. We were talking about a bear market, and this one is up double digits. He got rid of it. Interesting. Just an interesting move. He also got rid of Bristol Myers Squibb. Last 6 months, this one's up 13%. Now, you could argue that he's taking profits. Like, hey, it's up, taking my money, I'm putting it in the bank. He's doing whatever with it. That is we never know, right? We never know why someone would buy. We know we never know why someone would sell. We know why someone would buy. But in either case, if I'm going to hold on to something, and if I think that the market is going to be choppy, at least, I would keep the stocks that are up double digits, at least in my mind. But again, I'm not a billionaire. I'm not a billionaire, 30 or 40 times over, however, whatever his net worth is today. But in either case, he sold AbbVie, he sold Bristol Myers Squibb, that's BMY. He got out of Wells Fargo. Now, y'all know I'm not a fan of Wells Fargo. They are down 28% in the last 6 months. The interesting thing here is you sold Wells Fargo for whatever reason, and it's down 28%. But then instead of keeping Wells Fargo, or however you wanted to do that, you sell Wells Fargo down 28, but then buy Citi, which at this point in time is down 25. And then you also buy Ally, which is down even worse at 34%. So I'm curious as to what was the logic there. Now, remember, the time that this was filed was back in May. And things have obviously changed between May and July. So these numbers could have been different. We have the benefit of hindsight and saying which one would have made sense, it didn't. But I'm just really curious. I wonder, is it the composition of how Wells Fargo is organized? What parts of the business are growing? Which parts may not? I'm just very curious as to why. And I think he's had Wells Fargo for a while. Why he would sell Wells Fargo and then get a company that performance-wise, not social-wise, which I think Ally is way better social citizen than Wells Fargo. But again, rant for another day. But why would you sell out of that and get two banks that are doing the same and worse from just a pure returns perspective? Again, interesting. He got rid of Verizon. Verizon's down -5% in the last 6 months. Verizon was a decent dividend stock. I've never really been a fan of them as a customer or as an investor. I think it was one of the first stocks I bought like 12 years ago. I got my little dividend and I left. It's just not something that grows on a regular basis, and that's what we see here. And then the last one, he sold RPRX, and I don't have that. That's not a symbol I'm normally familiar with, so forgive me as I type this in because I forgot which one that was. But again, I'll just put it here so y'all can see it as I am looking it up. RPRX, just so I can make sure I get it right. And that is Royalty Pharma. Again, in the healthcare space, they're up 10% in the last 6 months, and he sold it. Again, I say this all the time. I don't learn a whole bunch about him selling, but it is still interesting because of the 5 companies that he had the most action in selling, weren't the only companies he sold. There's just some of the biggest moves. AbbVie, Bristol Myers Squibb, and Royalty Pharma, all in the healthcare space, all from all research and estimation that we all know are inflation resistant, recession resistant, not proof, but resistant. And you sold the 3 companies that tend to do best in an uncertain time like this. So, and all of them are up double digits. So we got AbbVie, again, AbbVie was up 10.4%, Royalty Pharma also up 10.4% in the last 6 months. And then you got Bristol Myers Squibb up 13.57%, and you got rid of all of those. It's interesting. It's interesting. So I'm not exactly sure why anyone would sell those at a time like this. I want stability right now, and if I were to do anything, at least in my mind, again, I've got credentials. I don't have Warren Buffett credentials, but to sell out of healthcare, 3 out of the 5 companies you sold, and then to get into financials, which have not done well this year, is just interesting. Now, the other thing I'll end with is this. Warren Buffett's goals are different than mine. His philosophy and his investing style is different than mine. And that's probably why he bought certain things that I wouldn't do. I have a very specific style where I try to ride things that are going well. I pause, I look back, I double check, and then I keep going. Warren Buffett has a much deeper look into companies. He does a lot more financial work when we talk about fundamentals. He's looking at balance sheets. He's looking at management. He's doing a lot of old school stuff, which obviously works. Y'all know I don't have no hate for Warren Buffett over here. And I like a lot of his styles. You can see The Intelligent Investor is a book I have on the bookshelf. I review it often. So there are some elements of what he does I take, and that is why I'm even looking at this now, because I'm curious. I want to learn what he's learning and what he is seeing. Some of these I agree with. Mckesson makes a lot of sense. Actually, if you want to go that route, it's just not my personal flavor. It makes a whole lot of sense. And it makes sense to get out of something like Wells Fargo. I don't know if I'm going to get out of Wells Fargo, if I'm going to go into both Citi and Ally. But again, he's way more successful than me. He's got a lot of credentials behind him, and he has a certain eye for some things. So I'm really curious to see how is this going to compare to his filing that's going to come out around August or so. That's when it is due. And see what things he does. Now, the last thing I'll say is that Warren Buffett is not perfect, even though he's really, really good. He was somebody who bought airlines right before the pandemic and then quickly reversed that. I think he sold Delta and maybe JetBlue. I know for a fact he sold out of Delta. I was like, look, this was not a good investment. Now, I said beforehand at the end of 2019 that, look, I'm just not a fan of airlines. This is not working out for me. I got my profit. out of JetBlue and got out of it. So, you know, he's not going to be perfect. There are going to be some things that he'll turn around, put in his annual report and say, look, we saw out of this. This is what happened, and discuss it and describe whatever else is working. So, again, a lot of interesting notes here. A lot of things that I picked up. A lot of things I'm curious about. Which one of these moves stood out to you the most? I would love to hear what you think. Does this change your opinion? Do you own any of these stocks? Let me know in the comments below. The other thing I'll say is this: I'm going to do an exclusive video probably Tuesday, maybe Wednesday, on how you can find out more about these 13 Fs, because he's not the only very, very rich person that has disclosed what he is buying and what he is selling. So there's a website that I use to help me find that. I did part 1 where we covered 5 websites for our members only to show you some of the tools that I use. The next one that's going to come out this week is going to be all about that 13F, all about what we call super investors and what they're buying, what they're selling, and how you can find out. So if you want to join that, make sure you're in the members only community. That link is here. It will be in the description below and almost anywhere else you can find it, but it's at buildingbread.com/members, and you'll be forwarded to that. We do at least one video, one exclusive video every single week. The subscription is only $10 a month. All right, so that is it for me. I'll talk to you later. Bye.